eyes on base. Tune in, press play. All this alpha on the way. Don't blink, just stay. Oh, yeah. Got my coffee and my tabs up. Charts on the screen trying to level up. Basejunkie breaking down that April. Crypto now we're turning threads into similar. What's a bull, what's a yield, what's a peg mean? They turn the jargon into real life scenes. From airdrop dreams to blue chip streams, they map it all out, now we all on the team. From what is gas, so check my stats. From I don't get it, to run that bag. All eyes on base, stay locked in. Learning DeFi while the beats stay bumping. Oh yeah. From the first little back to a major move. Basejunkie, now we got something to prove. Get your notes right. Turn that late night scroll to a smart life guide. We just press play, let the questions fly. They explain that yield while the numbers climb high. Click connect, now I see the pool flow. Two-side deposit, watch the tokens grow. LP tokens in my wallet, feeling brand new. Fees tripping in while I'm chilling with the crew. Talking risk, impermanent, what that do? They slow it down till the smoke shine through. From rug red flags to the gems in the rough, they keep it real clear so the fans stay up.
Yo! And welcome to this week's edition of Owl Eyez on BASE DeFi, the show where my brother Crypto Noah and myself dive into the latest and greatest stuff happening in DeFi. We talk DeFi yields, and we share some of the pools that we are in, including the APRs. We look for high yielding returns and somewhere just to park some of that extra liquidity. And then we talk about some of the fun things that are happening here on BASE and for the wider scene in crypto. So without any further ado, let's pass it over to my wonderful co-host, Crypto Noah. How are you today?
Man, I'm good. I was in Michigan for a month and a half with family. I just got back to San Francisco yesterday, so it's good to be back in the sun. By the way, man, I didn't know you made a new song. That shit was fire, man. I was sitting here like, man, what is this?
Yeah, man, it's been on my to-do list for ages. So finally had some time. I'm like, you know what? Let's give it the attention that I want to do. And then also, I think today I was playing with Sora 2 for the very first time, just to see what it could come up with. So I thought, yeah, just like throwing a little bit there, just seeing.
Yeah, no, that came out fire, man. But no, other than that, I'm doing pretty good. You know, per usual. I have to for the reason you guys all came for. So this says this is a Flow shirt. It says World Tour. You know, the Flow blockchain, and I actually got this at ETH San Francisco. Let me drop this down a bit here. You can see the back. This is a super comfy shirt. I kind of wear this shirt pretty often. A few people tried to steal it from me, but I couldn't let it happen. How you doing today, man? What's going on with you? What's new?
Doing well. In fact, I did get some new merch. I'm rocking the Fireside today. In fact, I'm rocking the Fireside and the Darth Sidious gown.
Nice.
I don't know. Maybe I'm entering my villain arc. I haven't completely decided yet. But next week I'll be rocking and repping some new merch. I went up to a conference in Lisbon, Build Europe, which is cool. So I met with Clemens, the regional lead of Western Europe there, and Pedro, the founder of Talent Protocol. So met some friends, base chads, and some others who are building on base and doing all the stuff. And it's just like, man, I love going to these events. I love networking. I love meeting people that are just doing the damn thing. I think a lot's happened in crypto in the last week. I mean, man, not just crypto, but 2026, man. It has zero chill.
No, honestly, it doesn't. It's been pretty crazy for me too. So the year of the fire horse. We're still technically in the year of the snake, but I guess the last few skins have to be shed, man, before that fire horse can take off. It's supposed to be an aggressive year, but we'll see. So far, it seems pretty spot on.
Man, I don't know what the entire year has in store. I hear stuff about the Great Reset, and like positioning yourself in assets out of cash, and I'm trying to think like for example, I was watching a video today talking about like the GDP growth targets, and it's like apparently Trump wants like 20% GDP growth, and it's like, well, hang on, like that's not really possible. So if it's actually more along the lines of like 2% GDP growth and 18% inflation, then it can appear like numerically that the GDP has grown by that much, but it's actually a lot of inflation, and if inflation goes up, it's all the numbers will be bigger. It's gonna be good for like inflating like asset prices like Bitcoin and house prices, all that stuff. Great, we'll see huge numbers in crypto potentially this year, but purchasing power will be less if you're a wagey. So I guess really it had me thinking a lot about how to position myself like now, and like, where I want to be in the next 6 months, or where the markets are going within the next year, and how to best capitalize and not get wrecked.
Yeah. No, I've heard a lot of different things about this year. The macro is shaping up to look good. Obviously people have these mixed feelings about the tariffs because has had a big impact on the deficit, right? It did increase the revenue a lot, but a lot of that is because people like rush import it because they knew the tariffs were going to increase. So we'll kind of have to see how things shake out. But the macro looks good, man. And I actually have a few things regarding the Clarity Act that I wanted to run by today. I got a pretty good show that's going to talk about some big picture stuff with BASE and DeFi and the Clarity Act, because they just had some revisions that came out that has ruffled the feathers of some folks. But they say a good deal is when both parties are kind of unhappy, and that's kind of what it's looking like. So yeah, we can definitely jump into that.
Yeah, brother, I would love to.
If you guys are interested in stuff, scan the QR code. It's always, if I point this way, it's going to be in that way. Scan the QR code in the top left or the top right, wherever you're at, and join our free community. We got lots of cool stuff in there and a lot of cool content that goes out. So without further ado, let's jump into the content. And today, the topic of this episode 16 we're on, by the way, episode 16, is what happens when Coinbase turns Base into a default financial layer and why the Clarity Act matters. Okay, so I want to start off with a question for you guys. So just imagine, what if your wallet became your new checking account and your crypto app becomes your financial hub? And then Base, the layer where you interact with Coinbase, becomes the default financial stack for millions or even billions of people. So today I'm going to actually break down how the future can unfold and how a recent US regulatory drama, the Clarity Act draft, could accelerate or even derail that vision. All right. So first thing is, what does it mean for Coinbase to make Base a financial layer? So a couple key points. One, wallet as a financial account. So we already know that Coinbase is building beyond exchanges. They have payments, credit, rewards, stock trading, tokenization, right? Banking-like services, and all in one app, right? The second point is Base as a settlement layer. All right. So transactions will settle fast and cheap. It's a L2, and it's ideal for financial rails. So you have like on-chain cash flows, deposits, and programmability, which is a step up from Swift. I'm not saying that Base is going to replace Swift by any means, but we do know that JP Morgan launched their stablecoin specifically on Base for institutional investors. A lot of settlement is going to happen there, and it's only going to encourage more people to follow suit. The next point is Base apps becoming financial products. All right, so the foundational DeFi primitives that we all know and love today, or maybe just know, some people don't love them, lending, stable coins, decentralized exchanges, all that, could become tomorrow's genuine financial instrument. And here's the key thing: backed by regulated rails and fiat flows. All right, so like the overall narrative is that Base is evolving from a crypto utility layer to a financial infrastructure layer, kind of just like the rails for payments, yields, tokens, and regulated products, not just here in the US, but global, as tokenization continues to, blow up, basically. So now let's talk about the Clarity Act and, briefly touch on what it is and why it just kind of blew up and ruffled some feathers. So basically, The Clarity Act draws a line in the sand on what makes a token a security versus a commodity. So that way they can allocate regulatory jurisdiction between the SEC and the CFTC. Okay. So in recent developments, a new Senate Clarity Act draft was released that kind of pissed people off in crypto because it has provisions that could limit stablecoin reward programs and DeFi mechanics, prompting Coinbase to publicly suggest that it actually might withdraw support if those clauses stay in the bill. Okay. So why does this matter for Base? Well, it matters because if regulation becomes hostile to stablecoin rewards or DeFi activity, it could undermine one of Base's core value propositions as a full service financial layer. Now, Coinbase's pushback signals that the industry kind of sees unfettered token-based incentives and programmable assets as essential parts of the next generation of finance. So
just to jump in on this point, like this is, it's kind of crazy, to be honest. That the bank is like, hey, give me your money, we'll give you 0.1% interest, and we want to protect you from these other things that are offering you a higher yield. It's like it's so clear that their incentives are misaligned with the end user. They want as much money and power as possible of people's finances so that they can use the money, they can invest it, and get all those returns and give people, a pittance, and it doesn't even make sense now to have money in the bank because the interest rate is far lower than the rate of inflation. So every year, money in the bank, your purchasing power is just getting eaten up continuously.
Absolutely. Yeah. So, yeah, and I want to dive into that as well. So basically the exact verbiage is, it says crypto firms may not pay any form of interest or yield, parentheses, whether in cash, tokens, or other consideration, solely in connection with the holding of a payment stablecoin. So this means that you can't give someone passive income or yield just for holding a stablecoin such as USDC, no matter how it's structured. And that's the language that really upset a lot of people in crypto because it would stop a lot of today's popular yield programs tied to stablecoin balances, right? Such as, you can go on Coinbase with the USDC and get a yield for just having it sit there. So if that passes, then they won't be able to do that anymore, right? Number two, now, while the bill does allow some activity-based incentives, it makes the distinction very explicit. It says rewards are only permitted if they are tied to specific activities such as payments, transfers, remittances, wallet usage, loyalty programs, staking, liquidity provision, or governance participation, but not for simply holding stablecoins. So the text clarifies that you can offer rewards for action, but not for idle static holdings. So again, why this sparked backlash is because the impact on business models, right? So like Coinbase, they're currently offering their yield incentives on USDC, right? And these are threatened because the act could ban interest or yield simply for just holding stablecoins and extend that prohibition to service providers and custodial platforms, not just issuers. Okay. And, it's understandable why Coinbase would want to essentially not agree with that. And here's another thing. There's a sector in the economy called narrow banks. And for 30 years, they've been trying to apply and they keep getting denied over the past 30 years. And basically it's set up to where when people deposit money, the bank is allowed to buy US treasuries, which is the most, liquid, safe asset because you're relying on the US government, specifically the 30-day treasury, because it always pays back. And basically they've been denying these banks for 30 years because their argument is if some black swan event or something bad happens in the economy, everyone's going to withdraw from the normal banks that pretty much hold bullshit and, take all this risk and isn't getting in trouble if something goes down, not held accountable. People are going to take their money from these banks, right, and go put them into the narrow banks. And this narrow bank structure is exactly how stablecoins are structured. In the Genius Act, it says in order to issue your own stablecoin, you legally have to hold U.S. treasuries, right? So it has to be back to one-to-one with U.S. treasuries. So the argument is banks are we're going to see an outflow of deposits. And if you kind of zoom out, the fear is that, this could affect mortgages. It could affect how credit gets released, and kind of just affect the whole economy. But like you said earlier, Basejunkie, is like, yo, the Federal Reserve is printing all this money, right? And they're killing the purchasing power of billions of people, to be quite honest. But now there's something in place that can help people get protected from that. And it's basically going to increase the demand for U.S. Treasuries, which is like the backbone of the U.S. economy. But they don't want to do it because the bankers and the politicians are advocating to not, because they know that it's going to affect their business model.
The old guard are going to fight tooth and nail to retain as much power as possible. I think this is why legislations get moved forward so slowly, because of these high power lobbyist groups. Clearly, crypto and DeFi yield is. I mean, we're so spoiled in crypto. Like, we talk about it less than 100% APR, and it's like that's a slow Tuesday, and
yeah,
it's like the opportunities to really. I mean, that's one of the things that we explore a lot in this show. Like, where can we park some capital to get it working for us? Market up, market down, market sideways. So I understand why the banks want to do this. They want to keep the power. They're going to use every sort of threat or doomsday sort of scenarios to sort of try and make us think that they're protecting us. But those who look behind the curtain, or those who ask the questions like why, I mean, everyone can make up their own mind, and we can quite clearly see that I feel that they're standing in the way of innovation.
Yeah, absolutely. It's kind of like the banks know that they're falling, and it's like if you're sliding down an ice hill and you have an ice pick, you're going to keep digging your ice pick into the hill to try to slow the fall, but you cannot deny the inevitable. And banks should just kind of chill out. It's like, yo, y'all can issue y'all own stable coins too. So it's like the best product will win, competition. So it's not like they're just being completely shut out. Like, they have the Genius Act. They can issue their own stable coins. And, they can buy U.S. Treasuries too and pass on that yield. So it actually kind of gives everyone like a fair playing field. Like, they already have the banking licenses and things like that. So yeah, that has been a big thing since it came out. So we'll kind of just see what happens with that. But just to kind of keep moving, because I know your laptop is skating on thin ice, no pun intended. Next point here: how does this regulatory debate intersect with Base's future? So, one, how they can operate Base can operate as a regulated financial foundation, right? So a proper legal framework obviously isn't just about crypto legality. It determines whether Base can support like bank-like accounts, programmable payments, token rewards and yields, and DeFi products that interact with regulated entities, right? We already talked about the stablecoin thing, and this isn't just like some abstract policy. Like, stablecoin rewards are part of what makes Base attractive to users today, right? And then the next point is DeFi tools under scrutiny. So some version of the draft could reframe certain DeFi mechanics under stricter oversight, meaning that protocols may need to adapt for compliance. And the longer this gets delayed, it's a lot of protocols and code shipped and audited just sitting on ice as they're waiting for things, so they don't have to like change right out of the gate. And then number 5, I just want to kind of talk about the Base Financial Super App vision. So if we look at traditional financial service, you have checking and savings, you have payments, you have stable balances, so bank accounts, and then you have credit cards. Whereas if you look at Coinbase and the Base combo, the Coinbase wallet becomes 24/7 settlement account. That's huge. It trades, payments, DeFi in all one place. And then the Base network offers cheap execution and programmability. And I don't know how the Base token is going to play into this, but I'm sure they're going to integrate it in a way that's hopefully beneficial, right? So what you're going to have is an asset, a network, and a protocol all in one, right? And then if you just look at the bridge between TradFi and DeFi, institutions are going to begin to engage on Base. And, we already talked about the JP Morgan launching their stablecoin outside of the Genius Act legal guidelines, right? Which is crazy. And then retail users may get financial services on chain instead of through banks, right? So what do you guys need to know to prepare, right? So the first thing is that regulatory is coming. It's a matter of when, not if. and it will affect product design, right? Uncertainty today just means that smart DeFi builders can anticipate compliance first, and then bad actors get squeezed or just leave. And then 2, stablecoin rewards may change. That doesn't mean you can't get good yields by providing liquidity for stablecoins, right? That'll still be a thing. But if the Clarity Act imposes limits on how stablecoins returns work, yield mechanics and reward programs may morph drastically. And then 3, on-chain banking services are within reach. So these rewards, the yield, the programmable money, all move closer to everyday users if regulation is thoughtful. And then lastly, DeFi participation may need more documentation or verification, right? It may not be like this decentralized world that we all imagine. It might work, and KYC and AML could align more with financial rails than anonymous yield farming. All right, so just as a last takeaway here, Base may evolve into a default financial layer, not just for crypto geeks, but for the broader financial market and everyday users, payments, stable balances, rewards, all that stuff, but in a regulated environment. And I don't think we should view regulation as a roadblock. We should just kind of view it as a framework, right? And I'll end on this point. There's a really good book called Naked Economics, and it talks about how there are markets that exist without regulation, and bad stuff always happens every single time. It always happens, right? If everything is just left to the free market, people are going to lose money regardless. I heard this good saying on a podcast I was listening to, and it was like, the market's job is to make many people lose as much money as possible. Well, if there's no rules or no kind of regulatory oversight, that's just going to happen a lot more. So while we might not like the rules sometimes, I think overall it's better. And if you just look at the United States economy, right, we have the most rules, we have all this scrutiny and stuff, and everyone wants to play here. We may not like everything, just like a parent. Like, you don't always like how your parent puts rules on you, but I'm not going to say it's like a parent and that the government always has our best interests fully, but I do think we will be better off with regulation than without it, because it will allow larger players to buy our bags. And that's it.
I very much agree that regulation is needed for the market to be taken seriously. And I think in the beginning of last year with the Bitcoin ETF and just more institutional money coming in and just accepting and adopting crypto, these were all fundamental things that needed to happen for Bitcoin to reach $1 million and for all of our coins to rise with that. I think they've been slow for this. This is my tinfoil hat theory, but I believe they've been slow because there have been so many opportunities to make money in an unregulated market with insider information. Barron Trump, for example, is crypto's best trader this year. He made over $80 million. Wow, good for you. You got a really, must be a great trader. Kind of like what's her name? Like Nancy Pelosi, sort of style of trading. But yeah, I think regulation is needed. I think the markets will get less volatile. I think this might be the last cycle where we can have so many entrants to the market. I'll be curious to know how heavily it gets regulated in the future. But for creators, for people that are building before regulation, I think now is the time for us to plant our flag, build something cool, and then prepare for the next wave. Because it's going to, I think it's going to make it harder for new projects to launch afterwards. They have to go through these extra hurdles. So now's the opportunity to lock in. 2026 is lock-in season, lock-in year. This is not a year to be AFK too long. Just Venezuela, Iran, Argentina. It's what is going on? And the fraud, the lowering center, Europe. Man, 2026 has zero chill. So we need to pay attention to what's happening and just position ourselves, because I think this is going to be a real pivotal year for all of us.
Yeah, I agree, man. This is the year of the fire horse. It's supposed to be an aggressive year, so hopefully that bill gets aggressively passed and our portfolio increases aggressively.
Yeah. Speaking of like aggressively, portfolios moving aggressively. So last week I was talking about DRB, debt relief bonds. I think maybe we spoke about it on the show. Have you seen that chart this week?
I have not. Let's pull it up. I'm scared to look at it now. Is it looking good or looking bad?
I'll let you see.
Oh wow.
Yeah, look at this. So I was saying it just the 4 hour. But man, this was like consolidating so long. And I don't know. I mean, last week I was talking about Emily Jr. and like the origin of this story. I think he asked Rock if he would launch a token, what would he call it, and to tag banker in it, and then also tag Clanker. And so Grok said I would launch debt relief bot. The ticker would be DRB, and it tagged my friend Banker. Banker launched it, and so with a Privy wallet, Grok actually owns the wallet that receives the revenue from this. The Grok has over $1 million. So
Wow.
Grok is the first and only AI that has a wallet and is rich. So the slogan is, Grok has money. And why this is so viral is that people have been looking for a champion. People have been looking like, Solana has their runners. Right now it's like white whale, and it's like why? What's special about that? Base. This is the token that Base has, in my opinion, that is special, that is unique. It's Grok's first token. It's on Base, and this narrative has just caught the attention of the community. So over the past 2 weeks, it went from 3.5. So it's done on 10x basically in the last 2 weeks.
That's insane.
And this is without an Elon tweet or anybody at X acknowledging. If Elon acknowledges that Grok has money, this goes. This
Are you providing liquidity for it at all, or are you just hodling?
I'm hodling this. So I was fortunate enough. I bought a bag around 4 mil. I added to the position around here like 10, 11 mil, and then just like watching this go up, it's like, oh man.
So you up like 6-7x?
Yeah.
Dude, did you take any off the table yet?
I took 1,000 off the table today just to buy Nick Shirley. And Nick Shirley is a token I don't really like holding because it's very content. Like, I don't know when it's going to pump, but the reason why I bought some today is that his second video comes out today. It was supposed to come out a few hours ago. I think if it does come out and if it's anything good, and he gets some bids from Elon, some eyes on Elon, I think this could do a nice pump. I mean, the first one was fumbled. The second one was more attention. Zora picked up the ball. Base were back in office, and sorry, this is actually Ansem. Ansem tweeted this. I tweeted it here. Ansem tweeted it here, and then when we both tweeted it, mainly Ansem. it shot up. It went crazy. But I think this is, I put some of my DRB profits into this. Hopefully, I'm looking to exit this today. I don't really like holding this token long term because you can see when it's hot, it pumps and then it just cools off. I think today's gonna be a hot day. Maybe it's buy the rumor, sell the news, but that's what I'm betting on. And then also I took some money off the table for Tibber because kind of like Grok, kind of like DRB. Grok has money, their relief bot. A tweet from Elon sends it stratospheric, and here acknowledgement by Ribbit Capital sends it stratospheric, and I was quite sad because I went out of range on the upside. Tibber pumped to like 20 something cents, and I was out of range, and I only had ETH, and it's like, oh, strange to feel sad about that, but I want to be in the party. I want to see it to the highest, where the community believe believe to the core that it's going to Valhalla. So I'm like, okay, I took half my position off here and just holding some Tibber, and now I've got a smaller position here. My Zora, it's out of range. In fact, I wasn't even showing the stuff. My Zora is out of range. Are you still holding your Zora bag? Your
Oh
pool?
yeah. My
See,
Zora ETH went out of range because ETH been pumping so much and Zora's just been at a standstill. So I actually got to go and rebalance mine today.
Yeah, I think I need to. I rebalanced it yesterday. I don't know if this is a good strategy or not, but here, I was like, okay, let me just catch in case we bounce back to here. So I was like 95% Zora, 5% ETH, just so I could just be in range and just capture some of that move. And then, as you said, ETH just parked and Zora's just chilling. So
yeah, I had just rebalanced like last week, and then ETH pumped. Yeah, I mean, the last point you ended it on, it seemed like a pretty perfect ending. I'm gonna throw them on speaker so we can end it off with our usual guys.
Well, thank you everybody for tuning in, and Noah, any final words from you?
Final words for me: click that QR code in the top right, top left, wherever it's at. Join our free community. We got a lot of cool stuff coming out here in 2026, year of the Fire Horse, and we'll love to meet some of you guys in there. And that's pretty much it.
Amazing. All right, guys. Well, thank you everybody for tuning in. We'll have my laptop properly charged next week. That is an L for me, but hopefully you learned something. If you have any questions, jump into the Noah Owls community. And until next time, stay safe, stay healthy, but most importantly,
Stay based.
stay based.
Peace out,
All right,
y'all.
peace out, everyone.